Tariff uncertainty weighs on US manufacturing, with export and import activity at multi-year lows. Oil jumps over 3% on geopolitical risk. Australia's housing market bounces back in May, while job ads fall, and Asian economies start showing diverging trade activity. That's coming up in our 5 Things in 5 Minutes on Tuesday, June the 3rd. And then, in the first of 2 deep dive interviews into Australia's agriculture commodity outlook, ANZ Commercial's head of agribusiness, Mark Bennett, looks at how Australia's cattle farmers have been affected by different weather conditions across the country.
Those with water and grass are in a position to hold, buy and sell, and those without water and grass are forced sellers into a market. That's just the nature of the weather at the minute.
But first in 5 and 5 with ANZ. I'm Alex Tarrant, standing in for Bernett. US markets showed caution overnight amid ongoing trade uncertainty. The effects of tariff policy saw the US manufacturing ISM index fall 0.2 points in May. That meant activity contracted for the 3rd straight month. ANZ economist Bansi Madhavani says from London that the index's import measure hit a 16-year low, while the export gauge was at its lowest in 5 years.
The weakness that we're seeing on the imports front is likely a pullback from the front loading that we were seeing earlier in the year. But the fall in export orders show that tariffs have not boosted US's export prospects just yet. More broadly, what we noted in the report was that survey participants reported widespread uncertainty caused by the back and forth in tariffs, which was making it difficult for supply chain managers to source goods efficiently.
At 4 a.m. Sydney-Melbourne time, the S&P 500 was flat, although the Nasdaq was up 0.3%. The 10-year US Treasury yield was up 5 basis points at 4.465%. Gold was up 2.5% at $3,400 an ounce. West Texas Intermediate futures were up 3.4% at $62.78 a barrel as traders turned their focus to geopolitical risks. The US dollar index was down 0.5%, with the Aussie trading up 0.84% at 64.86 US cents. The Kiwi was up 1.04% at 60.23 US cents. Number 2, the ANZ Indeed Australian job ad series dropped 1.2% in May from April to its lowest level since May 2021. ANZ economist Aaron Luke says there has been a tight range since mid-2024, indicating ongoing resilience in the labour market.
In addition to the slight decline in job ads, we have also seen hours worked being flat in April and declining in February and March as well. But we think it's still too early to say that this is the beginning of labour market easing. Employment growth has been robust in recent months, although there's been some volatility in the data. The unemployment rate has also been steady at 4.1%.
Number 3, Darwin has jumped out in front of other Australian capital cities for house price growth in 2025, according to CoreLogic's latest data for May. Here's ANZ economist Maddie Dunk.
We saw housing prices up 1.6% in May, and they're up almost 6% so far this year. Now, the next few capital cities, Brisbane and Perth and Hobart, we're seeing housing price growth of just over 1.5%. So this real divergence between Darwin and the other capitals. If you look at some of the main capital cities, so Sydney and Melbourne, housing prices were up 0.5% in Sydney, 0.4% in Melbourne in May, and they're both up more than 1% this year. So I think all in all, the data is suggesting to us that there is this momentum moving back into Australia's housing market.
Number 4, the overall 0.5% lift in capital city house prices in May indicates softer growth in April of 0.2% was just a blip, Maddie says.
It was likely related to a few things, one being the uncertain global environment, given those announcements on April 2, but also the fact that generally around election periods, we do see a bit of a slowdown and a bit of sluggishness in the housing market. And the other thing is there are a range of public holidays during April. So these factors might have explained why we saw softer housing price growth in April.
Number 5, 2 sets of export data from South Korea and Indonesia this week show how Asian economies are affected differently by US tariffs. South Korean exports fell 1.3% in May from a year ago, affected by auto tariffs. Indonesian data for April showed exports up 5.7%. Here's ANZ economist Crystal Tan.
The composition of exports coming from Indonesia versus South Korea is very different. Korea is a major exporter when it comes to semiconductors, when it comes to autos. But for Indonesia, it's more of a commodity country, right? Its key exports are things like coal, things like palm oil. So it's a different story there in terms of the basket.
Crystal Tan there. Now in our deep dive interview, ANZ Commercial's head of agribusiness, Mark Bennett, has just published ANZ's Winter in Focus Agri Commodity Report. I spoke to him about how recent wet and dry weather events had affected Australian farming conditions.
It's right at the start of winter now, and a lot will feel like they just never had an autumn, and the autumn is a really important period for a lot of the southern producers especially to just, get their stock and crops right and set before the colder winter months come in, and that just hasn't been available to a lot of them, and that's going to make it hard for a fair while for a range of reasons that we might sort of get into. But right now, I guess it's probably drier than a lot would like in the north of WA cropping. It's going into a longer period of drought and really dry conditions through South Australia. That extends through to southwestern Victoria. It's encroaching into other parts of Victoria as well. Southern New South Wales also, and Tasmania, I shouldn't forget there, where it's been dry, a really dry autumn and a tight summer. And then we go into the northern New South Wales landscape where we've got all of the north, central and northwest flooding up the coast and inland. And then, of course, we had the Western Queensland flood event, which took out a lot of cattle and caused a lot of damage as well. And so all of those conditions at a headline output for Australian Agri, and the general story looks okay, but it's a real trade-off between the really tough circumstances in some of those areas mentioned and other parts in between that are actually looking pretty decent.
So what's your outlook now for the cattle and beef sector, particularly with what those farmers have gone through weather-wise?
Yeah, it's a bit of a north-south thing, and those with water and grass are in a position to hold, buy and sell, and those without water and grass are for sellers into a market. That's just the nature of the weather at the minute. So most of our herd is in the northern half of Australia. Putting the floods aside that we've recently seen, conditions have been pretty good, and so you're seeing those northern producers come south to buy cattle that the southern producers can't hold. And that's kind of pretty helpful for this southern market, because if not for that northern restocker demand, I'm sure there would be more pressure on prices for those producers. So that's held up pretty well given the extra volumes we've seen come through the sale yards recently. I think behind that, a real factor in driving our positive outlook for the sector is that international markets are really strong. And again, beef is an export dominant industry. Our biggest market at the moment is the US. We have 4 key markets really that we sell beef into, being the US, Japan, Korea and China. But the US in particular has run into a series of droughts. They've been liquidating their herd. They're down to 60-year lows. And not only do they therefore need to purchase a lot of imported product from Australia, which is largely the sort of lean trim product that supports their hamburger market, they're equally looking to rebuild numbers now, which keeps them out of our key export destinations. And so those opportunities for price represent, a really good thing for the Australian industry as well at the moment. Now, there are other parts of the world that can produce into that, but the Australian market or industry is one that's well renowned for a high quality and safe and trusted product. And so that bodes really quite well for us. So yeah, the US being a big driver there probably underpins our outlook for beef prices for a bit of room to go up for a while yet. Then of course it's up to our own sector to grow the cattle and process them effectively enough to get them into those markets.
Mark Bennett there. I'm Alex Tarrant, standing in for Bernard Hickey. That was 5 and 5 with ANZ for Tuesday, June the 3rd. Catch you tomorrow with the last of Australia's partial Q1 GDP indicators, ahead of full figures being released later in the day.
This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.